Okay, basically what I want to do, this is a quick scenario on perfecting uh, uh, perfecting your low risk entries using multi-time frames. Here real quick what I want to go over, this is a void. Prices fell down dramatically right here. When prices fall, that leaves a void. A void is lack of major or minor support or resistance. So in this area, this is a void. So what happens? Well, usually when prices get in a void, that gives them easy rally because it's usually dealing with one bar at a time, not a group of sellers. So I'm on a limited time of recording space, so I'm going to kind of just rush through this. Right here, I'm looking. Prices made a new high right here. Uh, what usually when you have these classes and they teach you on uh, buying prices, wait for confirmation, buying prices for a new high. Usually what happens is this. They work fine and I took them also, but what happens, they don't give you all the pieces on refining an entry when you x-ray it down to a lower time frame. So say with this point for instance, we made a new high, this comes down. The actual trade here is to teach you, in a sense, a buy above this confirmation. Well, at this point, I'm looking and I'm not worried about these two areas. These two areas has been dealt with by this close. So now at minimum I'm looking for prices to reach here. And I don't use any, I have the 200 moving average and these trader pivots and volume, and that's pretty much it as far as on my charts. But I don't want to buy here. I want to buy in this tail. And this is what I've just been looking at, charts and charts for hours and hours and hours, just spending time looking at these, going through this. I don't want to be here in this time frame. This is a 10-minute chart and this is a 2-minute chart. This could be done with the daily and the weekly, a 1 minute and 5 minute. I mean, you can pick whatever time frame, just but basically this is a 2 minute and 5 minute. So what I'm gonna do, once it's made a new high here, and this is the new high right here. Prices broke a new high. This here was major resistance. Prices broke major resistance. That told me it was a trend change. Once prices broke major resistance, we were no longer in a downtrend. So now I'm looking at the point where buyers is. This became major support. So now here, I'm looking to to enter buying long as this major support is not violated. I'm off a new high and now I'm looking to buy at major support. So prices come down and guess what? It comes down here. We get this bar. We get a consolidation and a breakdown. Some people buy these breakouts. I'm not going to fade this higher time frame. The higher time frame just made a higher high. Was bullish. So at this point, I'm not when interested in buying a breakout. That's why the higher time frame is important. But we came down here, we got this minor top of tail bar on increasing volume at major support. That showed me there's a lot of interest here. Here I have this green bar, which I call is a COG, changing of the guard. Above this green bar I'm in, my stop is right here. This high is 11, low is this is a 9 cent stop. I'm in right here. So now I'm in here. If I would have bought a high 15, this is 12, that's maybe, and up here maybe 13, 14 cents, depending in there. But this gave me a low risk entry right here. So I bought, and I bought in the area of major support. So if it violates this area down here, then most likely I was on the wrong side of the trade. I don't have to worry about keep getting stopped in and out, whatever. When you buy at support, it's always buyers at support. The question is, how many buyers? How bullish are they? So to increase our odds, our higher time frame needs to be bullish. So here we go. At this point, I'm in. So when I'm in and I go, and since I bought early, I have to let it play through all these wiggles and everything. Just keep my lot. I have 3 lots, and say if I do a 2,000 share lot, my biggest lot is first, usually 2.5 or 3-to-1 ratio, and I'm selling that off. Then I have my 2 500 lots, which are bonuses, and so if I make those are fine. Once my first lot is filled, I break those up to break even, so I cannot lose money. But until that first lot is filled, I'm sitting there just waiting. So as it goes, it breaks out. Now some individuals teach after this high you break out, and that's normal, and your stop would be here, which this is a big stop. Low is 12, low high 34, like a 20 cent, 24, well, 20 plus cent stop. I'm not worried about the math this instance, but when I'm only sitting on a 9 cent stop, I think that's what the figure was. But they buying this breakout. When they're buying this breakout, I'm looking to be selling my first lot up in here. I'm cool. And guess what? I'm not the only one doing it. These institutions are doing it too. You thought people didn't buy up in here? So they're selling this here. You got a lot of people in here. They're waiting to sell now. They're selling. They're dumping their shares off. And guess what? Somebody's buying up here and they got stuck. And it's not me because I'm selling. So by here, I might have minimum one lot left. I know I have one lot left. So let's see what happens. As it gets up in here and we're still going, got moved. Definitely by here, I would have been out on my last lot. You know, trade below that. If I did bar by bar, I would have been out because I'm managing it, my trade from this time frame. So we're fine here. And guess what? So this is the breakout. We broke out. So now prices here is moved around, consolidating. We got a retest and fail right here. A test for this area twice. Some people bought here. I'm not buying on this, and I don't have enough time to go through why I'm not buying that. But at this point, I wouldn't be buying that. What I'm doing, I'm sitting here, and I'm just waiting. And what I'm doing, this is what I want to see. I want to see prices fall off. I want to see people here came up here, couldn't make a new high, people shorting. So now this came back here, tested this area twice. They shorting, and guess what? They're making money here. But the higher time frame tells me the bigger move is up. So I'm not even wasting my time with that. We're here. This is major support right here. So at major support, I'm waiting. I'm waiting to see what price action happens at major support. I'm not going to just buy at this price. I need some indication that tells me price is going to change there. So they're giving up. You see this volume right here? This volume tells me on this breakout, a lot of institutional money. People stepped up. They wanted it. It just reached a point where people weren't interested. But when it comes back here, this is a big significant area of supply and demand. There's a lot of buyers and sellers up in here. So it has to deal with this area before it could penetrate lower. Here, it has nothing to deal with. It's a void. So it shifts between supply and demand, the path of least resistance. So at this point, my odds say that this will be the path of least resistance. So we'll find out. I'm not predicting it. This is just we'll find out. And so price here and it breaks down. Once I see this breakdown, this is a breakdown, a BBF, a breakdown failure. This bar has no follow through. It broke down, and I got this big reverse bar. This bar completely reversed backed up at this point. And so what you're looking for right there at the top of this bar is your entry to buy. Right here, your stop is right here. We got the individuals here. This would have really never gave you a chance. They should have bought in there. So right when I buy up here, my first lot is gone here, but I'm still holding some of mine because I see what happens. So I have to sit through playbacks and everything. But my first lot on this big bar, my first lot is gone. I'm filled, so I can move my stuff up to break even. I mean, I'm fine. I can move up to here, you know, and see what happens. So I'm fine. And guess it plays around, and you know, that's pretty much makes another little high. And so this is it. My orders would have been filled. This is how I use multi-time frames to perfect low risk entry. So I'm not buying a breakout or any other thing from the time frame that I'm trading. I need to narrow down to a lower time frame, and this will give optimal risk and reward management. No 20 MAs needed. When it comes down to a 20 MA, all it's doing is coming down to major support in a lower time frame. It's always buyers at major support. The question is how many. If the trend is up, then the odds is it'll be enough buyers to keep it going if the higher time frame trend is up. But that's really all the recording time that I have for now. Thank you.